Alibaba under pressure again today. The shares of the Chinese tech company falling today. The stock is now down more than 4% over the past week. So, Karen, what is your take on this weakness?
Yeah, so this one has really been a thorn in my side. I think it's not only Alibaba. I think Tencent, JD.com, Maitan are all down. But I think specific to Alibaba, a couple of things that came out this week. One, they lowered their fees for merchants. I think this was part of the antitrust settlement that we saw. I don't know if that was last week or the week before. A second reason might be Maitan, which I had just mentioned, raising $10 billion. They say they want to compete with Alibaba. They are kind of the Alibaba of the services. The third thing is Jack Ma. There was a story earlier that was sort of, I don't know if it was officially denied, that he would be selling his ant. I actually think isolating Jack Ma from the story would sort of be a positive if that happened. One thing I saw today, and I wondered if this hangs on it, is that SoftBank was increasing their margin loan backed by their Alibaba stock to $10 billion. So, you know, we're all kind of sensitive to the idea of stock that's being a collateral for a margin loan. I don't know if that was weighing on it as well. I think the stock was just so sick of going down every day, it actually managed to end the day only down very slightly. I put on this today a 240, 260, 1x2 call spread for May 21st, which is their earnings. Maybe I'll call it into options action on Friday, see what people think, or maybe Pete can opine. I don't know. I thought I wanted more exposure.
That would blow up on the Twitterverse, that's for sure. Tim, do you think that this Baba weakness is just sort of the anti-monopolistic crackdown that Beijing is imposing on dozens of internet companies there?
Yeah, and I think that you remove the value of, again, some of the investments in the Ant and, you know, even Alipay. And I think, look, I love the fact that there's a fine that's been paid and a page turned. And I think not a lot of look back on this. I think their GMV, their dominance is not really rooted in pushing merchants around. I mean, Tmall and Taobao are just dominate. And if you want to do a sum of the parts on this, just their e-commerce business and just their cloud business, this is a $250 stock. Doesn't count $28 of cash in the balance sheet, doesn't count $40 a share in media assets, doesn't count $10 a share in some of their broader investment services. So I think there's a lot of sum of the parts value here. I think there's naturally concerns about Big Brother in China. I think it's overdone, but the stock trades awfully, and it's been frustrating for me and Karen and other shareholders.
Yep. All right.
Shepard Smith here. Thanks for watching CNBC on YouTube.